Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 22, 2022. Let's talk about top stock with the heavy short ratio. And as you all know, market is a little difficult of late, very volatile. I want to make sure you don't buy too many of these short squeeze stocks here and have a small allocation for the short squeeze. And it's okay if you stop playing the short squeeze game for a while because right now it's the stock pickers market. You can buy some great quality stocks for long term. So I just wanted to keep in mind, don't put all your money into short squeeze type candidates here. When the market is doing well, you could make a lot of money in the short squeeze situation. But right now market is a little different here. Market has shifted. We should also shift along with it and buy some great quality stocks at bargain basement price. So with that, let's jump in and get started. As you see here, we'll start with the market update here. Look at stocks with the heavy short ratio and go after better candidates here with the positive gross margin and low RSI. Then we'll even look at better stocks here with positive gross margin, positive sales growth, as well as low RSI. And we'll also look at take it a notch higher, look at stocks with the low valuation also. And we'll look at great stocks with a high short ratio with great financial and health grades. And finally, let's look at stocks with a heavy short ratio and heavy TTM squeeze. These stocks have to move, they have to move fast. We'll see what stocks can go higher. So with that, let's jump in here. From a stock news perspective, as you can see here, we got tech stocks at a worst week since March 2020. The moment you see a headline like this, markets will freak out. That's the best time to slowly start buying quality stocks and invest for long term. Nasdaq suffered the big loss here, big weekly drop as you can see here. Bad news from Peloton and Netflix as you can see here. So this is when you got to start investing slowly in the quality names. When the market news is so bad, that's the best time to buy quality stocks at a bargain price. As you see here, we got geopolitical issue here with the invasion of Ukraine by Russia. We got to watch here that might impact the market also. Bitcoin falls big time here. You could buy some great Bitcoin stocks as well as actual Bitcoin and Ethereum. It's a good time to buy. And we got governments, all these governments, they want to reduce inflation, but at the same time, they're trying to see if we can do it without raising interest rates. That's a very fine balance here. But at least in the US, Jerome Powell decided to increase the interest rates. That's why market is freaking out. And we'll see the Fed minutes on Wednesday evening. That will impact the markets on Thursday morning. And earnings season is up here. We got IBM, Microsoft, Intel all reporting next week. I expect good news from Microsoft and probably Intel. IBM could be same old, same old. We'll see how it goes. And then we got your great pickers market here. If you're a stock picker, you could buy some great stocks at low bargain price here, and you could invest for a long time. And many folks ask me, hey, you know what, I'm an initial investor, young investor, what stock should I buy? We'll cover some of those in the next segment. You can look at the quality stocks you could buy and sock it away for years to come. So with that, let's jump in here. What's going on here? Look, we got fear gauge. Yesterday it was at 52. Now fear gauge is at 43, as you can see here. I expect fear gauge to at least go below 30 here. And that's when you can, even buy more quality stocks. Right now, you can buy stocks slowly here. Don't buy huge quantity. If you want to buy 100, buy 5 or buy 2. So that's the way I do it. So buy slowly and don't worry about market dropping. That's the best time to buy. And now let's look at what's going on from a over the time fear and greed perspective. Look, we got fear and greed. Right now it's about 42 or 43. Right now we're in the fear zone, slightly in the fear zone. And look, we hit the fear zone earlier and then we went ahead. Back in 2018, when there was a high interest rate, look, we hit 20 here. We hit below 20. That's the best time to invest. I expect us to hit at least the 20 mark as we go forward. that's when all the weak investors will get thrown out. And if you're a long-term investor, you should slowly start putting your money right now, and as it comes down, buy more and more. The reason is we don't know when it will hit the bottom. That's why it's always good to slowly start buying and building up your position as the market comes down. So with that, let's go into a little more detail, get a market update from Thinkorswim. As you see here, we got futures market, and look, let's make it a little bigger here. All right. So as you see here, we got futures market. S&P 500 is dropping big time. It's below 200-day moving average. That's a line in sand. The moment it comes below 200-day moving average, things can happen in a hurry. It can go further down a little bit. That's when all the weak investors will get thrown out, and long-term investors will step in. And same situation in tech-heavy Nasdaq here, squarely below 200-day moving average. And same story in Dow Jones. Dow Jones was a stronger index, but right now it's also below 200-day moving average. And Russell small cap stocks squarely below 200-day moving average. So that's why it's a great pickers market here. If you're a stock picker, buy some quality stocks. We'll talk about in next segment, and hold it for a long time. And now let's look at bond market. What's happening in the bond market? That's bond markets are impacting stock market, as you know here. Let's jump in and see what's going on here. So look, we got bond market here, and bonds are going down, as you see here, down big time. Look, bonds are going down big time. Now it's trying to go higher slowly, and main culprit is the interest rate. Look, yield is going higher. So as yield goes higher, stock market comes down. There's a well-known situation here. Look, oil is surging here. I would not buy oil here. It's almost at the top, as you can see here. Let's wait for oil to cool off, then we can buy here. And then we got gold. Gold is also going higher. Whenever gold is down, it's good to buy some gold as a hedging position here. But right now it's slightly higher. I would wait for a little bit cool off here. So with that, let's do one thing. Let's look at the S&P 500, a bigger picture here. So with that, let's jump in here and go to S&P 500 and go from there. All right. So let's look at S&P 500. Let's say SPY or say ES here. ES is S&P 500 future, as many of you know here. And let's look at weekly 5-year. Right now we got weekly 5-year. Look what's going on here. So we got right now S&P 500 is coming down, as you see here, trying to hit its 100-day moving average, as you can see here. And look, this is the time COVID-19, it came big time below even 200-week moving average. And then you got 2018 time frame. This is when high interest rate environment, just like we are having right now. Look, market came tumbling down. It hit 200-week moving average, and then it went higher. And look, right now 200-week moving average is here. So that's why don't think market sell-off is over. Back in 2018, 2019 time frame, when there is a high inflation environment, stock market did hit the 200-week moving average, and then it went higher. Right now, we are far away from 200-week moving average. That's why I expect some pain, buy some quality stock, and go from there. So with that, let's jump in here, look at high short ratio stocks. So before we go, let's look at ETF and see what ETFs are telling us. Exchange traded funds are a great way to understand market sentiments. Look, we got a big 800-pound gorilla here, S&P 500. It's down 8.7% from 1-year high, 52-week high. And if you look at 1 year, we are sitting at 16% increase for 1 year. So we are not in a correction territory right now. The moment it comes below 10% from 52-week high, we will be entering the correction territory. Right now, we are not in the correction territory, and volume is surging. Look, volume is 193 million shares traded. Typically, this is around 120,000 million shares traded. Big volume stocks are coming down, as you can see here. And then we got here QQQ, which is Nasdaq, as many of you know here. Nasdaq is also coming down big time. Look, Nasdaq is Nasdaq is trying to see where to go here, so we'll keep a close eye on Nasdaq. Looks like my text is up here. Let's get rid of text. All right. So as you look here, we got Nasdaq here. Nasdaq is also down big time, as you see here. At this time, it's good to slowly buy Nasdaq. Nasdaq is in a correction territory below 13% from 52-week high, and Russell is also in a correction territory, as you can see here, as well as EEM, emerging market, and Dow Jones Industrial Average is not yet in the correction territory. We'll wait how it goes. In a thumb line, punch line here, market is down, as you can see here. 1 day, 5 day, 10 day, 1 month. It's many of these indices are down. That's why you got to be careful here. Buy some quality names and invest for long term at this time here. And as you see here, we got financials here. From a financial perspective, we got XLF at the top here. XLF is also going down. People are thinking, financial might do well in the high inflation environment. On the contrary, financials are coming down here, mainly because inflation is high, difficult to get labors at a low price here. Even some of the loans may be dropping off here with a high interest rate. That's why financials are also coming down, as you see here. And on the positive side here, look, bonds are going higher slowly. The moment bonds go higher, you got to be careful, watch out here, and see what's going on in the interest rates. Interest rates, as you see here, it's going slightly higher. It's a zero right now, but as the yield goes higher, stock market goes down. So you got to watch carefully here, as if the Feds decide to stop bond buying program, bonds can come down. TLT can come down. That will cause the interest rates to go higher. So that's why you got to be careful here. So with that, let's jump in here and look at a few more details. Now we are looking at a few more ETFs here. Look, XLV. It's a healthcare, as many of you know here. Healthcare is holding up pretty okay. It's not losing too much value, as you can see here. Typically, healthcare is a steady eddy. That's why even up here, it's holding up pretty okay compared to other ETFs. XLP, which is consumer staples, that's going higher. The moment stock market tumbles, typically consumer staples will stay a little bit better, because you got to buy your Dove soap and your shampoo. That's why consumer staples typically hold up well. And then you got gold here, safe haven, as you can see here. It dropped a little bit, but still strong. Look at the RSI in gold. Gold is really going nicely here. RSI more than 50. That means it's doing well. And look, technology, it's a bloodbath here, big time down, as you see here. And XLY, consumer discretionary, is also big time down. Consumers are not feeling love here. And biotechnology is down big time, as you see here. It's down in 1 day, 10 day, all the way to 6 months here. So it's a bloodbath here. So that's why, don't put all your money into short squeeze game. Buy some long-term stocks here, quality stocks, and go from there. So with that, let's jump in here and look at stocks with a heavy short ratio. Look, as you see here, we got the stocks with a heavy short ratio. See what's going on here. Look at 1 day, 5 day, 10 day, 1 month. Many of these names are in negative territory here. Some of them have got slightly higher performance here in 1 day and 1 week, but most of them are down. That's why at this time it's very hard to make money in the short squeeze game. Instead, you should look at high quality names. What I've done is I've looked at Altman-Z score here. Look, I include the Altman-Z score. This tells you the financial stability of the company. As an example, we got this little stock called BFRI here, just $3.47. Look at the Altman-Z score. Altman-Z score is telling this company can go out of business here with a negative Altman-Z score. That tells you don't invest, don't play the game with this one here, stay away. And also we got few more with the negative and low Altman-Z score here. Look, we got few more here with the low Altman-Z score. I think you should stay away from those names here, and don't invest in those. There are better names to buy at these levels here. And look, I also put here quality score. Keep watching the overall quality here. So as you look at the overall quality, you should look at this score here. Higher the better. If you look at this list here, most of the names have low overall score here. Go after the better candidates. For example, BT here, it's a Bitcoin play. Bitcoin is tumbling down, as you know here. This one has got a 56 score here. That tells you it may be okay to slowly buy this one. Right now, Bitcoin is tumbling. You could be okay. And then as you see here, we got a few more a little bit higher. Look, BGFE here, Big 5 Sporting. It's got a score of 95. That tells you this is a better candidate here. It's also trying to go higher in one day. That's a good one. You could slowly buy that and go from there. And then finally, we got two more here. We got Tiger. Tiger also has a little better overall score here, 41. You could look at that one too. That's also going higher. So in a nutshell here, higher the score, better the financial positioning here, those stocks will try to go higher. You could even hold them for a little bit longer term. And what I've also done is I've included a put call ratio here. Put call ratio will tell you how is the option market looking at these stocks here. The moment put call ratio is more than 1, that means folks are bearish. They're buying more put options because they think stock will go down. But if the put call ratio is lower than 1, for example, you see here we got Blink Charging. Blink Charging has a put call ratio, as you see here, just 0.70. That tells you there are more options, call option buyer. Folks think this stock can go higher. That's why put call ratio is below 1 here. And in few scenarios, we got put call ratio below 1. We got Indie Semiconductor. Many of you know Indie here. It's a great semiconductor stock. Look, put call ratio is below 1 here. That tells you long term this can also go higher. There are a lot of folks who buy call option on this one here. And then you got Lemonade, same situation here. Lemonade, not Lemonade, it's the Workhorse. Workhorse has got put call ratio 0.69 here. So it tells you that's also okay to buy because it's more folks are in the option market. They are buying the stock. So at the same time, buying the option. At the same time, overall score is 21, which is better than most. So that's how you should look at it. Take a look at both the short ratio. Look here, all these stocks have got high short ratio. Also look at put call ratio. That will tell you what's going on in the option market. So with that, let's jump in here. Continuation. I will not talk about each and everything, but you get the idea. Here's the continuation. We got more here. Look, 1 day, 5 day, all bloodbath for most part here. At the same time, keep watching the overall quality score here. Go after the better quality names here. So look, we got Camping World at the bottom here. This has got nice 82 as the overall score here. That could be a good one. You could buy that slowly here. And they also have an Altman-Z score 2.9, which is not bad. And as you scan through, there are few of them with nice quality score here. Siri has got 50, as you can see here. But this one hardly moves. Maybe not a good candidate for a short squeeze game here. And keep watching the put call ratio here. A few of them have got low put call ratio, including Romeo here, 0.13. That tells you in Romeo, a lot of folks are buying call option here. That's why put call ratio is squarely below 1. And look, Altman-Z score is 4.6, and it's got good amount of money. Look, it's got a $181 million cash, and it's got overall score of 31, which is not too bad. I would say look at such candidates here, and we got one more here. Future Holdings here. Look, it's got a nice 56 as the overall score, which is not too bad. Higher the better. Go after the higher overall score. You will do comparatively better. Market is tough here. Let's go after quality and go after the better score. And ignore all those, negative Altman-Z here. We got a bunch of stocks with a negative Altman-Z and red in the Altman-Z. Avoid such things here. Market is tough. Easy money days are gone for a while now. Go after the better candidates here. And let's continue here. Same continuation. Let's move this a little bit here so you can see that properly. It's a continuation here. You could follow same methodology here and go after the better candidates here and go from there. As usual, look at the overall score here. Go after the better stocks here versus low quality stocks, and also look at put call ratio. The moment it's below 1, that tells you those are the good ones. Folks are buying call options, betting the stock will go higher. So with that, let's jump in here and look at better way to grow your portfolio safely. Here we are looking at positive gross margin, as you can see here, and low RSI and volume greater than 1 million shares. These are a little more safer compared to the previous list here. So with that, here is the list. As you can see here, all these stocks have got a good positive gross margin. Keep watching the gross margin here. All positive gross margin. Companies are doing okay from a gross margin perspective. And look here, all high short ratio, as you can see here. And also watch overall score and Altman-Z score. Go after the better candidates here. If you see lower score like the one here, BFRI, ignore, avoid right now. And the negative ones you can avoid. Go after the higher score candidates here. Look, we got one here. I think this is BTBT. We talked about it. And we got one more here with a nice score here. Big 5. We talked about that one too. And we got probably one more at all the bottom. Sirius. The stock hardly moves. Not a short squeeze candidate. So with that, let's jump in and look at more candidates. As you see here, same methodology, nice gross margin here, positive gross margin. And also look at Altman-Z score and the overall score. Go after the better candidates here. Look, we got one more here with the nice score here. We talked about Camping World, nice score. You could look at that one also. And we got one more here, which is Dick's Sporting Goods here. Dick's Sporting Goods also has a nice score. Look, 98. One of the highest score. You could look at this one also for long-term play here and go from there. And we'll continue and look at continuation here. As you see here, all these stocks have got positive gross margin. Nice here. And keep watching both short ratio as well as put call ratio. So put call ratio lower is the better. That tells you more folks are buying call option. Look, we got AEO, American Eagle with the lower put call ratio below 1. You could look at that one here. And we got a few more, as you can see here, Microvision, and few more with the lower put call ratio below 1. And we got Room here. Looks like Room has got very low put call ratio. A lot of people are buying call option here, but overall score is low. You should pass up on this one. And also Altman-Z score is not great here. You should pass up on this one. As usual, look at a nice Altman-Z score, not red, but green or black, and also nice higher overall score. Those could be better candidates and go from there. So with that, we got continuation here, and we look at better way to grow your portfolio. Here, as you can see here, in addition to positive gross margin, we are also looking at positive sales growth. So these are the better names here. Let's look at those. As you see here, we got the list, and look, we got both positive sales growth as well as positive gross margin. These companies have got both top line sales growth and bottom line gross margin. These are better candidates here. And some stocks, as you can see here, BTBT, it also makes money. It's got a positive net margin too. As usual, keep watching here both short ratio as well as put call ratio. So as you see here, put call ratio below 1 means folks are buying call option. Those are the good candidates here. Look, we got a few of them here. VNTR, lower put call ratio, and we got Right Aid, also same story here, relatively lower. There are a lot of people buying here. So you could look at such candidates here. As usual, keep watching Altman-Z score as well as overall score here. And I also put cash position here. Some are cash rich companies. For example, one here, Camping World. As you see here, they got a lot of cash in their portfolio here. You should look at such strong companies here and go from there. So look at Camping World here. They got $4 billion cash in their balance sheet here. That's a good one. And also the one here, that's the volume here, but the cash is just 133 million. Not too bad. Few companies have got good cash, as you can see here. Dick's Sporting Goods as well as Comstock, they got good cash here. As usual, keep watching Altman-Z score as well as overall score. Go after higher overall score here. We got few of them here like Camping World and we got Dick's Sporting Goods, and we got here American Eagle, as well as Guess. They got a nice score here. You could look at such situations here. Avoid the ones which are in red, like HRTX, and we got a few more as you can see here. So with that, let's jump in here and look at top stock with a heavy short ratio continuation here. All these stocks have got good sales growth, positive sales growth, and positive gross margin, as you can see here. And keep watching both short ratio as well as put call ratio. Go after the lower put call ratios. For example, we got few here, GameStop, and we got RIOT Blockchain, Sun Power, and so on and so forth. And stocks with a high put call ratio that tells you in the option market, folks, the betting stock will go down. You got to be a little careful there. And also look at Altman-Z score and overall score. Overall score, higher the better. Go after such candidates and go from there. So with that, look here, we got RIOT Blockchain. This one could be a good one here. It's got a nice overall score, 79 here. They got money. Altman-Z score is nice here. And this one has got a low put call ratio below 1. You could look at such candidates here and go from there. And next we'll look at the continuation here. Same continuation. Look, positive sales growth, positive gross margin, and look at put call ratio as well as short ratio here. You could look at such candidates here. Look at put call ratio below 1. Those could be good candidates for you, and go from there. And also look at Altman-Z score and overall score, and go after better overall score. I also have a cash position here, so that way you know what companies have got a lot of cash on their balance sheet. Look, we got two here. We got Zillow and Kohl's. Both of them have got a ton of cash in their balance sheet. Looks like Kohl's is better candidate at this time here with a nice overall score. You could look at that one here. With that, let's look at a few more continuation. This is the best way to grow your portfolio. In addition to positive sales growth and positive gross margin, we also have low debt. Let's look at such candidates here. These are the better candidates. So with that, as you see here, we got the list. Look, we got positive sales growth, positive gross margin, check. And we got debt here, lower debt here, all below 1, as you can see here. And same methodology. Keep watching short ratio, all high short ratio, and go after lower put call ratio. For example, we got VTNR, lower put call ratio, and the overall score is 28. Not too bad here. You could look at such candidates here. Always look at Altman-Z score and overall score, and also the cash position. Some companies have got a lot of cash here. You could look at such names here. The one here, GameStop, looks like they do have some cash, as you can see here. Nice $1 billion cash here, $1.4 billion cash, but overall score is lower on GameStop. Instead, you could look at stocks like RIOT Blockchain, which has got a high overall score, as you can see here. So with that, we got continuation here. You could look at this list also. Keep watching. Nice grade here. We got a few companies with a very good grade. We got KLIC here and VC Properties. Both have got great grade here. You could look at such candidates here. And also we got one more down here, Winnebago, which is a recreation companies. As many of you know here, it's a good one to buy with a nice rating here. And we got a couple more here with nice grading here. We got, I think it's Regal. Regal has got good 71 grade here, not too bad. So with that, let's jump in, look at the continuation. You get the idea. Keep watching these overall grade here. Also look at both short ratio as well as put call ratio and go from there. And next we look at better candidates here. As you see here, continuation. Let's look at stock with the high short ratio and also positive gross margin. This is where high short ratio meets good financial and good growth grades here. These are the good ones to buy here. These have got solid financial and growth grades, but high short ratio. As you see here, the list maybe a little bit shorter than the others. Look, we got all overall score. Look at the overall score here. All of them have got nice overall score here. All of them got above 75 overall score. At the same time, Altman-Z score, you don't see any red here. All good companies with nice Altman-Z score. These companies are not going to go bankrupt. And look at the short ratio, all high short ratio here. It keeps dropping off at the bottom here because you don't see too many good stocks with the high short ratio many times. That's why investors are afraid to short the stocks with a nice overall score and nice financial positioning. So you could buy these names here. These are the much stronger names here. You could go after these ones and go from there. And we got continuation here. Let's look at when short ratio meets TTM squeeze. These stocks have to move fast. They can't wait because they got short ratio here as well as TTM squeeze. So let's look at this list here. High short ratio, TTM squeeze, gross margin greater than 0. These are good companies. Low RSI, stocks are sold off here. Nice volume, and Altman-Z greater than 1. That means financially these companies are stable. They're not going to go out of business. So with that, this is the looks like, okay, there you go. This is the list here. As you see here, we got few companies. Keep watching here. We got Altman-Z score. With many of these, I got a little better Altman-Z score above 1. I would say avoid the ones with the red here. Go after the ones with the either orange or green. And look at the TTM squeeze here. We got either 1 day squeeze, 3 day squeeze, one weekly squeeze, or a monthly squeeze here. And also keep watching what's going on in 1 day, 5 day. The moment you see stocks going higher in 1 day, 5 day, like SFM here, Sprouts Market, that tells you this is it's having a squeeze. It's going to go higher. And same story here with Akamai. Akamai is also a good one here. It's trying to go higher. You could buy some Akamai here along with the NPTN, the same story. The moment you see in the short term stock is going higher, you could go after such candidates here and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.